It is 8:26 a.m. Pacific Daylight Time. It's the 29th day of April 2026, and this is episode 1310 of Bitcoin. And the Czech central bank chief comes to Las Vegas and speaks to the crowd at the Bitcoin conference. I find this kind of fascinating. I mean, because it's not a name that we would associate with going to the Bitcoin conference. I mean, we were surprised last year, or the year before last, or whenever it was that Trump decided to go to the Bitcoin conference, but this is a little different. The Czech central bank chief gave a speech, and it's going to be interesting that what the speech contains is interesting. But what I find more fascinating is the fact that it's the Czech central bank chief flew all the way over to the United States to go to Las Vegas to go to this conference. I think there's more to this than just what he said. Then I don't think Sam Bankman-Fried's getting out of jail. He's not getting a new trial, and I'll tell you about it. Israel. Shekel-pegged stablecoin. Yeah, it's coming, bro. It's definitely coming. And there's a breakdown of the failure of crypto project after crypto project after crypto project. I wish that this article that I'm going to give you from Cointelegraph would tell us when we can expect the complete destruction and utter removal of all shitcoinery in the world. Sadly, it's not going to say that because, as we all know, the shitcoiners will always be with you. In the second part of the show, Andre Cronje, or Cronje. I can't pronounce this dude's name, man. It was whatever. He's got a problem with DeFi. And and he's one of the DeFi kings. He was there at the very, very early stages of what we now know as decentralized finance. He was one of the people behind SushiSwap and Yearn. He was definitely the cat behind Yearn Finance, which, if you don't remember what Yearn Finance was, or actually is, it kind of came up right after SushiSwap, because SushiSwap had its own issues way back in the day, and Andre decided to go do his own thing. But he's gonna make some statements here. Prediction market volumes do just soaring, and there's a particular class of people that's behind why there's so much volume going on. Then the CFTC is going to sue Wisconsin. I think it's funny because the SEC, the FBI, the DOJ, and the CFTC basically used to just go after all these crypto projects, and now they're just going after the states. I think it's an interesting turn of events. And if you're using an AI agent in your software programming project, you might want to think again. That's going to finish up the show for the day. So let's fly over to Las Vegas and not lose all our money on the gambling floor. All right, so Bitcoin Magazine, Micah Zimmerman, Czech central bank chief backs Bitcoin as 1% reserve slice in a conservative but innovative strategy. Czech National Bank Governor Ale Mikl used a Bitcoin industry stage in Las Vegas to defend a reserve strategy that mixes strict inflation control with measured exposure to digital assets. He described the bank's move to add a small Bitcoin allocation as a way to raise expected returns without increasing overall portfolio risk. Mikl said that when he became governor in mid-2022, inflation in the Czech Republic was near 20%. He then told the audience that the central bank pledged to bring inflation back to 2% within 2 years, and they met that goal through discipline, not magic. He said money had been too cheap for too long, the currency had weakened, and there was too much easy money in the system. The bank responded by supporting saving and strengthening the krona, and its rule now is, quote, to stay hawkish forever. Alongside that stance, Mikkel highlighted the scale of the Czech National Bank's balance sheet. He said, the institution manages around $180 billion in foreign exchange reserves, equal to roughly 44% of Czech GDP, and described those reserves as among the largest in the world relative to the size of the economy. The task, he said, is to build for the future, think ahead, and invest in a way that protects the country. That has meant shifting away from low-return bonds and increasing exposure to assets such as stocks and gold through low-risk portfolios. Mikkel said the next question for the bank was whether it could do more to build a stronger portfolio for the long run. That led to an internal debate over Bitcoin. He recalled first using Bitcoin to buy coffee in Prague and acknowledged that its price swings made it look risky since its value can be higher one day and lower the next. He argued that other assets also move up and down, and that the key issue for a central bank is how each asset behaves inside a broader portfolio. According to Mikkel, Czech National Bank reserves found that Bitcoin has low long-term correlation with many traditional reserve assets and does not move in the same way as they do. Over longer horizons, he said Bitcoin can provide returns that are not closely linked to other holdings, and on that basis, the bank introduced a 1% Bitcoin position in its reserves. In the bank's analysis, he said a 1% allocation lifts expected returns in Czech koruna terms while leaving overall portfolio risk unchanged. Quote, when you add Bitcoin to your portfolio, it works better. Returns go up and risk stays the same. That is diversification, he told the audience. Mikkel framed the move as part of a broader philosophy for central banking in an era of digital assets. His message to the crowd was to remain conservative but innovative in how institutions work and invest. For the Czech National Bank, that has meant a strict inflation stance and a strong domestic currency paired with a controlled experiment in using Bitcoin and other non-traditional assets to strengthen reserves over time. That's the end of the article. It's not the end of the story, because as you heard, it's not that he's defending buying or placing 1% of the Czech national reserves into Bitcoin. That's already done. He got on a plane in the Czech Republic and flew his happy ass on to the other side of the planet to go to Las Vegas to the Bitcoin conference and stand in front of a group of people that are not his nationals and tell them the story of a central bank putting an allocation of 1% into Bitcoin. That's kind of big. I'm sorry, that's probably, in my opinion, that's literally the biggest story of today that I'm going to bring to you. So I have to ask why. Why would you waste your time? Well, okay, not wait. That was a bad framing, bad host, bad me. I apologize. Why spend the time to get your happy ass up, have the worst jet lag that you could possibly accrue by literally moving to the other side of the planet, and going to a Bitcoin conference to defend your 1% allocation? Is he getting heat at home? He hadn't said anything. And if we believe what he has to say, he took a 20% inflation and got it back down to 2%. I don't believe any of these guys anymore, so I'm taking that one with a grain of salt, but let's say he's right. And the stance to stay hawkish forever is an interesting move. I don't know. There's something about this guy I kind of like him. They made a move. 1% allocation into Bitcoin's been done for the Czech Republic. It doesn't seem to have failed them. In fact, I guess he likes the position so much that he took the time to fly all the way over to Las Vegas. So I don't know. This is a guy to watch. We'll have to see, what he does in the future, but I don't know, man. I'm going to be watching this guy pretty closely. Okay, so on to Sam. Judge shoots down Sam Bankman-Fried's bid for a new trial. And this is Stephen Graves for Decrypt. A federal judge rejected Sam Bankman-Fried's bid for a new trial, dealing a blow to the imprisoned FTX founder's efforts to overturn his fraud convictions. U.S. District Judge Lewis Kaplan issued a scathing denial on Tuesday, dismissing Bankman-Fried's claims that there were new witnesses whose testimony warranted a new trial. Quote, "None of the witnesses, for example, is newly discovered," Kaplan wrote in his ruling, noting that Bankman-Fried, quote, "could have obtained or at least sought to compel their testimony, but he did neither," end quote. The judge characterized the motion as part of a calculated reputational rehabilitation effort, stating that, quote, "this motion appears to be one part of a plan to rescue his reputation that Bankman-Fried hatched and even committed to writing after FTX declared bankruptcy, but before he was indicted," end quote. Bankman-Fried's conviction and sentence is under consideration by the Federal Appeals Court in New York, but the FTX founder has also separately sought a retrial in the motion filed by his mommy in February on his behalf. Although Bankman-Fried withdrew it last week, claiming he wouldn't receive a fair hearing from Judge Kaplan, the court still decided to take time and issue a formal denial to close the matter. The FTX founder had alleged that Nishad Singh, the firm's head of engineering, had changed his story after threats from the government, and that two other executives, Daniel Chapsky and Ryan Salami, would dispute the prosecution's claims, but that they had declined to testify for fear of retaliation. In his filing, Judge Kaplan stated that Bankman-Fried's assertions that the witnesses' absence was due to government threats and retaliation was, quote, "wildly conspiratorial and entirely contradicted by the record," end quote. Government prosecutors had already mounted a forceful opposition to the retrial request before its withdrawal. Quote, "The defense's decision not to put the witnesses on his witness list or to compel their testimony forecloses any claim that their post-trial views are now newly discovered," U.S. prosecutors wrote. Prosecutors particularly disputed Bankman-Fried's suggestion that FTX's current reorganization efforts somehow vindicated him. The filing noted that at one point the exchange held just 105 Bitcoin. Let me repeat that. At one point, the exchange held only 105 Bitcoin against customer claims that approached 100,000 Bitcoin. Quote, "The motion's most aggressive claim, that FTX was solvent, that customers have since been made whole, and that the prosecution therefore rested on a lie, is factually wrong, legally irrelevant, and deeply misleading," prosecutors stated. The denial marks the latest chapter in the legal saga that began with FTX's dramatic November 2022 collapse. Sam was charged with multiple counts of fraud, conspiracy, and money laundering, with prosecutors alleging he misappropriated billions in customer funds from his exchange to cover losses at his trading firm Alameda Research and fund political donations, as well as luxury purchases. His conviction on all charges in November 2023 represented one of the most significant white-collar prosecutions in recent history, with the 25-year sentence reflecting the scale of the alleged fraud. Bankman-Fried has pursued multiple strategies since his conviction, requesting a new trial after firing his attorney in February, while a court letter submitted in his name but written by his mommy was rejected by Judge Kaplan a month later. President Trump has ruled out a pardon for the FTX founder, further limiting his options for early release. God, I keep coming back to this number. FTX was telling their clients that they had 100,000 BTC. That's the customer claims. That's what that on paper. If you add up what all the customers of FTX were legally entitled to through their relationship and affiliation with FTX was 100,000 Bitcoin. Sam only had 105. Not 105,000, 105. He owed 100,000 Bitcoin. And yet he has stated on several occasions, and I've brought them to you here on the Bitcoin and podcast, dude, that we were completely solvent. No, you weren't. You were never solvent. I don't know, maybe back in the day when you first opened up before you bought the arena in Florida, maybe then you might have been approaching solvency, but dude, no. I mean, the guy is a liar. It's sad, and it's too bad that he's going to spend 25 years in, 25 years is what he got sentenced to. With good behavior, I'm sure that they will shorten his sentence somehow, and he'll get off on with good behavior on parole. I don't know. But I mean, he might be in for 20 years. I mean, dude's going to be like 40 or 50 years old when he gets out of prison. Stop stealing people's money. It's kind of simple. All right, Israel. I can't say it the way that Senator Graham says it. Israel. Shekel-pegged stablecoin has been approved. Atlas 21 going to tell us about it. Israel financial authorities, or rather Israeli financial authorities, have approved the launch of BILS, B-I-L-S, a stablecoin pegged to the Israeli shekel issued by virtual exchange Bits of Gold. It sounds like a leprechaun. The announcement came on Monday, April the 27th, 2026, from Israel's Capital Market Insurance and Savings Authority, which granted the authorization following a 2-year pilot program on, Solana. According to the official statement, the reserves backing the stablecoin will be held in Israel in designated and separate accounts. And Yuval Rausch, founder and CEO of Bits of Gold, stated, quote, "BILS creates a direct bridge between the Israeli shekel and the global digital asset economy, enabling real-time payments, on-chain trading, and programmable financial applications built on a regulated local currency," end quote. The launch of BILS comes at a significant moment for the Israeli currency. At the time of publication, the shekel was trading at 30-year highs against the US dollar with an exchange rate of 1 ILS equal to 0.34 USD, so 34 cents per shekel. The global stablecoin market currently has a total capitalization of $320 billion, dominated by the United States dollar-pegged stablecoins such as USDT. Okay. Shekel stablecoin, nobody needs it. I mean, it's not like, sure, shekel's going to be present on foreign exchange markets, but is any good or service on a scale that matters dealt with in shekels, like oil? Oil is not settled in shekels. This is yet one more example of somebody who spent too much time pointing at Bitcoin and laughing instead of figuring out what the hell was going on, trying to jump in the game, but they're jumping in way too late. Oh well, not my problem. Great ghee. Get yourself some ghee. It's the best in class animal cooking fat for every use that you can imagine. Just take the guesswork out of a great meal. What is ghee? It's butter, except it's clarified butter, and that's important. When you take ghee through the process of clarification, you essentially start with a whole lot of just butter, and this one is grass-fed A2/A2 butter. Right? I've talked about this before. I won't belabor the point, but for people that are sensitive to milk, it may be because there's a funkiness in the protein that's built by the A2A2 gene. Right? And again, this is molecular biology. I won't get into it, but some people get inflammation problems. A2A2 was the way milk has always been, except in modern dairy culture, we kept trying to get the cows to produce more milk. We kept crossing breeds. And next thing you know, one of the proteins kind of is different than the milk that we all grew up with as a species. And in some people, it causes some major problems. And this is not going to do that. This is grass-fed A2A2 butter. And you start with the butter, you melt it down, you get it up to a kind of a hot temperature, just enough so that the proteins in the butter, and there's a lot of protein left in the butter, kind of settles to the bottom and quote unquote cooks out. The water, and there's quite a bit of water left in butter, vaporizes because it's kind of boiled out, and any sugars that are still left in butter, and there's some, complex themselves with the protein and fall out of solution. All you're left with is pure 100% grass-fed A2A2 animal fat. Just delicious. If you're into any kind of Indian cooking, ghee is a staple. And the greatest thing about ghee is not just the flavor, it's that it's shelf stable. It's butter that you can keep for months at room temperature in a jar. It's amazing. It is an amazing food preservation technology. It has amazing taste. Get yours at greatghee.com. But please, please, please use the coupon code Bitcoin and you, or actually not the coupon code, use the link that you'll find in the show notes. It's a direct URL to basically, I don't know, my affiliate link to Great Ghee, and that lets Great Ghee know that I made a sale for him here on the Circle P. It's where I bring plebs just like you with goods and services to other plebs just like you who want to buy said goods and services, but you will be buying it in Bitcoin, because if you're not selling it in Bitcoin, you're not in the Circle P. Great Ghee. Use the URL in the show notes. All right, next up, crypto projects shut down as token models fail under pressure. This is Johan Yoon writing for Cointelegraph. A wave. It's a veritable wave, ladies and gentlemen, of crypto shutdowns is unfolding across the industry this year, hitting projects from trading platforms to analytics tools. April was no exception, as decentralized email service Dmail said that it's shutting down due to high infrastructure costs, failed fundraising, and weak token utility. Let's say that one again. Due to weak token utility. Quote, in prior cycles, projects could extend runway through new issuance or venture capital support. Roshan Daria, a restructuring advisor and CEO of crypto holding company Ecobase, told Cointelegraph, quote, that path is largely closed, so losses are being recognized earlier and outcomes are more often winding down than recoveries. Crypto built a fast way to raise capital through tokens, but still lacks a framework to unwind it when things go wrong, making it difficult to reorganize claims or coordinate stakeholders once conditions deteriorate. As market conditions have tightened in recent months, projects are drifting into slow declines instead of the abrupt collapses seen in past crypto downturns. Projects are deteriorating over time as user activity declines, treasuries weaken, and funding options narrow. Quote, you can see this in cases like Tally and Step Finance, where there is no single failure point, just a steady decline in treasury value and user activity that compresses optionality over time, said Daria. DAO tooling platform Tally said that it was winding down after concluding the market for governance tooling had yet to develop at scale, while Step Finance moved to shut down after a hack, saying efforts to secure financing or a sale failed to produce a viable outcome. Step Finance suffered a $40 million security breach in January, according to Step Finance themselves. Some breakdowns still follow more familiar patterns, however. Blockfills filed for bankruptcy in March after freezing withdrawals. Its creditor, Dominion Capital, alleged in a lawsuit that the firm commingled customer assets to cover customer losses, or rather, to cover company losses. Tokens once offered a fallback, allowing teams to raise capital or subsidize growth, but that mechanism is no longer as reliable, Daria said. And he added, quote, earlier cycles treated tokens as a primary funding mechanism with an implied alignment between users, holders, and operators. That alignment has proven fragile in stress scenarios, particularly where token holders lack defined rights or recourse, end quote. Some are starting to treat tokens as claims that may need to be consolidated or reworked. In March, Across Protocol proposed a token to equity buyout. Risk Labs, the team behind Across, said the token and decentralized autonomous organization, or DAO structure, limited its ability to close deals with enterprises and institutions. Unlike traditional companies, most crypto projects lack a clear path to restructure once conditions deteriorate. Corporate bankruptcies provide at least mechanisms to pause obligations, renegotiate with creditors, and reorganize capital structures. In crypto, such avenues are often missing or poorly defined. Crypto projects often operate through a mix of foundations, offshore entities, and token-based communities with no unified legal structure governing liabilities. In restructuring, token holders typically have no formal claim on assets nor cash flows. That limits what they can do under pressure. Projects are often left choosing between raising brand new capital on worse terms or shutting down without a clear hierarchy of claims or a way to bind stakeholders to an outcome entirely. Quote, most projects do not have access to formal restructuring tools, and their stakeholder base is fragmented across token holders, equity investors, and users with no clear hierarchy or enforcement mechanism, said Daria. Quote, that makes it difficult to recapitalize, restructure obligations, or run a controlled process to preserve value. And in that environment, once liquidity tightens, outcomes tend to default to wind downs or distressed asset sales rather than some kind of coordinated recovery. Tokens made it easier and more accessible for crypto companies to raise capital and scale quickly, but offer limited support once conditions do deteriorate, and they do deteriorate. Daria said the current wave of shutdowns is driven by tighter capital availability and structurally weak balance sheets, and many projects entered the bear market with treasuries heavily concentrated in their own tokens or assets correlated to their own tokens. As prices fell, the runway contracted. Quote, at the same time, funding channels have narrowed, with more selective venture deployment, weaker token issuance, and thinner secondary liquidity limiting both exit and financing options. So far this year, projects have more often wound down quietly than attempted formal restructuring. Without clear frameworks to reorganize claims or coordinate stakeholders, recovery paths remain limited. Some projects have begun exploring ways to consolidate ownership and introduce more formal structures, suggesting at least parts of the market are starting to adapt after running into the limits of token and decentralized governance models. And that's the end of that article. But lo and behold, it's not the end of what I have to say about it. Back in the day, which was not too terribly long ago, we just called them rug pulls. Because this is all bullshit. Stop buying shitty tokens. Stop thinking that because it's got crypto labeled on it, that all of a sudden you're going to get rich. None of this shit makes any sense. It never did. This whole argument of going through and trying to sadly dissect why our favorite crypto projects can't restructure or have limited legal recourse to be able to go through a Chapter 11 type bankruptcy? Because you're not a business. You sold a dream of bullshit. You had nothing to back it. It doesn't take very long for the curtain of that particular shitty play to be pulled back so that everybody can see that it's really just a play. And now you're crying and whining that you don't have legal recourse or some kind of formalized structure to save your ass. There's nothing to save. There never was. Crypto is 99.999% smoke and mirrors, and it is designed specifically to take your money. So I'm sorry for the author of having to go through the whole fucking exercise of writing this shit down and bemoan and wail and cry and fill their diapers in the front and in the back because crypto doesn't have the same kind of structure as, I don't know, formal business. Well, boo-hoo. There's one way to fix that. Buy Bitcoin and hold Bitcoin. Let's run the numbers. CNBC futures and commodities, Brent North Sea oil up 7.5%. That should tell you how things are going in the Middle East. $119.05 per barrel. West Texas Intermediate itself is up 7.5% to $107.39. Natural gas still acting as a hedge, down 2 points to $2.63 per thousand, and gasoline is up 5 1/3 to $3.75 a gallon. Good luck finding that price. Merbon crude is up 2.5 points to $109.31. As you would expect, all your metals are down except for palladium, which is crawling sideways at 0.12% to the upside. Gold in the red by 1 point to $4,559.50. Platinum is down 3 points. Silver is down 2.5 to $71.38. Copper is down 2/3 of a point itself. And ag, mostly in the green today. Biggest winner is, it's sugar. Ooh, shit. 4.11% to the upside. Biggest loser is cotton, 0.5% to the downside. Live cattle up 1/3. Lean hogs up, 1.7%. And feeder cattle down a little over 1/3 of a point. Meanwhile, the S&P is down 1/3. NASDAQ is up, but only barely. Dow is down 2/3 of a point, and the S&P Mini is down almost a full point. I guess we've got some big tech revenue reporting that's going to be happening today. On to Bitcoin at $75,880. That's a $1.52 trillion market cap, and we can only purchase 16.7 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,022,182 and 1/2 of. Average fees per block are 0.02 BTC in fees on a per block basis. There's about 42 blocks carrying 79,000 unconfirmed transactions waiting to clear. High priority rates get you in at 3 sats per VByte. Low priorities will do it at 1 sat per VByte. 915 exahashes per second. So we saw a hash rate drop from yesterday. Still, that's all the protection on the Bitcoin network that I could possibly ask for. From Draper's Fear, yesterday's episode of Bitcoin, and it's Kano with 2121 sats says, just think of all the eSats richer we're all going to be. Just not Satoshi. BS. Yeah, it's bullshit. Sats McJ, 2100 Sats says, I use LLMs to code extensively, but not with agents, just in a browser chat. Software is all about architecture, and the actual written code is only a byproduct of that. You can architect yourself into good code, but you can't code yourself into good architecture. Ooh, I like that. That makes a lot of sense. It's a good way of thinking about it. Jason High with 250 says, I have a recurring rabbit dream of a creature so foul, so cruel that no man yet has fought with it and lived. Bones of full 50 men lie strewn about its lair. Death awaits you all with nasty, big, sharp, pointy teeth. You don't know what movie that's from? You need a better education. Permanerd with 210 says, Sir David dropping knowledge bombs. Thank you, sir. I appreciate that. Nick Dose with 201 says, cheers. Nostergang with 101 says, why are you wearing that stupid man suit? Let's see, is that it? Yeah, I do believe that's it. If you can't deliver Satoshis for a donation through a boost, please consider a 5-star review on any one of the 4 major podcasting platforms, all of which I have URLs directly into the show for the show, so that you can go directly to each platform, directly to the show with one click. And then it's just a little bit more work to give me a 5-star review. I certainly would appreciate it because it helps surface the show to more people. That's the weather report. Welcome to part 2 of the news that you can use. Andre Cronje says DeFi is no longer DeFi as builders debate circuit breakers. So before we get into this, remember what happened in the first part of the show. The last story I read before we did the numbers break was talking about this guy basically wailing and crying and moaning and pissing about the fact that all these token things are going downhill. Well, here's the other side of the story. Written by Ezra Reguera for Cointelegraph. Andre Cronje says much of decentralized finance is, well, no longer DeFi in that strict sense of the word, as builders debate whether circuit breakers and other emergency controls are now necessary to protect users from exploits. Pausing to say, the circuit breakers and the emergency controls are 2 phrases that you should definitely relate to back to that story in the first part of the show. Bankruptcy procedures, legal recourse, right? It's watching the shitcoiners be just completely fall the fuck apart. They're just falling apart. At least with the Bitcoiners, most of the hardcore Bitcoiners don't like the way that traditional finance is moving in on Bitcoin, but we know that they cannot do anything about Bitcoin's infrastructure. You know, I have a node. It is a decentralized network. You might have a node. I've got the same copy of the same blockchain that you have. My mempool is filled with different transactions than what your mempool is filled with. There are tens of thousands, maybe hundreds of thousands of nodes at this point, all across the world. And that's the infrastructure of the Bitcoin network. Even though users are part of that, and users can be me, you, and BlackRock, BlackRock has no control over the infrastructure. It doesn't mean that they won't try to get the core developer team to do things that they want, but they can ask and they can beg, and it's just not really going to matter. Even if core gets on board and they fork Bitcoin, they might end up forking themselves right off of the actual Bitcoin network. That's up to the core developers. All right. And that's, whatever. It doesn't matter, because the rest of this shit is clearly, completely at the mercy of traditional finance rules, regulations, all the structures. Everybody wants to be able to file bankruptcy in DeFi now. And the hardcore Bitcoiners will tell you there's nobody's coming to save you. If you lose your keys, you've lost your Bitcoin. That's pretty much it. We have all kinds of sayings. Trust, don't verify, or verify. What was it? Trust but verify, or don't trust, verify. And then there's not your keys, not your coins. right? We should add another one. If you lose your keys, you lose your Bitcoin. And nobody's coming to save you. What I'm witnessing right here is because of the crushing of venture capital, and none of these bullshit foundations can get easy money anymore. They're actually having to stand on their own two legs, and they don't have the strength to stand very long. Their muscles never developed. They were always going to be contained by traditional finance. In most cases, it was in the form of venture capital backing. And now that shit's gone away, and it has, all these people are falling down, and DeFi is just going to be a big shit show. Back to Andre Cronje, the Flying Tulip founder, told Cointelegraph in an interview that many protocols are no longer immutable public goods, but rather, quote, teams running for-profit businesses with upgradable contracts, off-chain infrastructure, and operational controls. That shift changes the security model. While early DeFi protocols were mostly defined by immutable smart contracts, newer systems often depend upon proxy upgrades, multisigs, infrastructure providers, admin processes, and human response teams, according to Cronje. Quote, I think what we have today, Flying Tulip included, is no longer DeFi. It's not decentralized finance. It's not immutable code. It's teams running for-profit businesses. The comments come as April's DeFi exploits push security narratives beyond smart contract audits and into questions of operational risk. On Thursday, Flying Tulip added a withdrawal circuit breaker designed to delay or queue withdrawals during abnormal outflows. The move follows major incidents involving decentralized exchange drift protocol and restaking platform Kelp, with estimated losses of around $290 million, respectively. Cronje said the industry focuses on audits when many systems can be changed by developers or controlled through administrative processes. Quote, the focus over all of the industry is still very much so on the contract side and not sort of the more TradFi side, Kanye told Cointelegraph, adding that many recent exploits have involved traditional Web 2 stuff such as infrastructure access, compromises, and social engineering. He said protocols with upgradable contracts need traditional checks and balances around who can upgrade code, who approves changes, and whether there are proper time locks and multi-sig controls. Curve Finance and Yield Bias founder Michael Agarov shared the view that recent incidents show the risks are increasingly tied to centralization and off-chain dependencies rather than only smart contract bugs. Quote, the vast majority of the most recent DeFi exploits happened not due to errors in code. They happened because of centralized risks, single points of failure which live off-chain. Urgarov said Aave, Kelp, and Layer 0 smart contracts were not hacked in the recent RSETH incident, arguing that the compromise came from off-chain infrastructure. He said DeFi protocols can be exposed to a whole tree of risks, with the largest risks often tied to humans rather than code. Cronje said Flying Tulip Circuit Breaker is not designed to permanently block withdrawals, but to create a response window when outflows exceed normal parameters. Pausing to say who sets those parameters and under what conditions do they set them. Continuing, quote, our circuit breaker isn't actually designed so that we can stop or prevent anything from happening. It gives us time to react, end quote. Flying Tulip's system gives the team about 6 hours, although Cronje said smaller or less geographically distributed teams may need 12 to 24 or even longer. He said the tool makes sense for contracts that hold users' funds, but should be viewed as one layer among audits, distributed multisigs, time locks, and other controls. Quote, security is always a layered approach, Cronje said. It's never a, this is the one thing that makes you invulnerable, end quote. Urgarov was more cautious. He said circuit breakers can make sense in theory, but only if they are implemented in a way that does not create a new privileged attack surface. Quote, the circuit breakers are controlled by humans, which means they could become a potential vulnerability themselves. He warned that if emergency controls allow signers to change contract code or block withdrawals, compromised signers could turn the safeguards into a drainer or a centralized freezing mechanism. In his view, the better long-term answer is to design systems that can keep running safely without manual intervention. Oh my God, I got to come back to that sentence. Quote, the goal of DeFi design should be to minimize human-centric points of failure, not add to them. DeFi needs to be safe, and safety comes from decentralization. Standard Chartered framed the Kelp episode as a sign of DeFi's growing pains rather than a fatal failure. In a Wednesday research note seen by Cointelegraph, the bank said that the April 18th theft exposed systemic risks after the impact spread to Aave, but said the more than $300 million raised by the DeFi United Coalition and structural changes such as Aave version 4 and the Ethereum economic zone suggest the sector is developing stronger defenses. DeFi United site shows over $321 million raised or committed. The bank said those upgrades could reduce reliance on bridges, which it described as a major attack vector in recent crypto hacks. All right, I want to read, that's the end of the article. I want to read this one sentence over to you again. In Egarov's view, the better long-term answer is to design systems that can keep running safely without manual intervention. If you were not present in the summer of whatever it was, 2019 or 2020, when SushiSwap and the entirety of the DeFi ecosystem was basically dropped upon the crypto world, then you don't know that that's exactly what they said all this shit was. This is exactly what they said it was. That it was a way to do finance safely without manual intervention. That's what everybody was told. And it was a fucking lie. And all the hardcore Bitcoiners lined up. And one after another said, there's something fishy in Rome over here, dude. This smells bad. And as usual, we were called toxic maximalists, blah, blah. Nobody listened to us. And people just kept losing money. And we kept pointing it out, saying this is a problem. Well, now the people in DeFi themselves are literally identifying exactly what it is that they don't have that they told everybody that they did have with thieves and liars. That's what this is. It's every shitcoiner is the same. They either lie to you to steal your money, or they don't know what the hell they're talking about and somehow or another end up with your money. But most cases, they don't. They end up losing their money, and somehow or another, they keep telling people that you got to get into this token or that token. Or you got to take yield bearing shit over here on SushiSwap and trade it for, I don't know, avocados or some other food based token, and you'll get 9.75%. And it's all a lie. There is nothing about decentralized finance right now that has any capability other than make people look like idiots for losing entirely too much money. It's sad, but we told everybody this 6 years ago. It took 6 years for people to start going, you know what? Maybe they were right. I hate it. I hate shitcoinery. And I'm not all that thrilled with prediction markets, but they exist, just like shitcoinery does. Prediction market volume tops $25 billion a month. As retail activity dominates, crypto drives onboarding. Yay, the block. Brian Danga is going to tell us where we are in the state of prediction. Prediction market volume climbed to $25.7 billion in March. That's a 10.6% jump from February. Most users trading under $10,000 according to the report from BitGet Wallet, and it was produced in collaboration with Polymarket themselves. The report is based on 1.29 million wallets tracked in the first quarter. It shows that 82.3% of users traded less than $10,000 over the period, with growth concentrated among micro, light, and mid-tier retail users. At the same time, activity expanded across crypto, sports, and political markets as users returned more frequently and engaged across multiple categories. Per the report, crypto is the primary entry point into prediction markets. It accounted for 40% of activity among micro users. Bitcoin event contracts alone drew 593,000 users in the first quarter, the report said, generating $5.42 billion in volume and making it the largest crypto market by participation. And then they talk about shitcoins, and I don't even care anymore. The report attributes crypto's onboarding role to continuous market access, familiar price dynamics, and low entry thresholds with median trade sizes typically around $2 to $3. I want my $2. While crypto facilitates initial participation, sustained engagement shows a shift towards markets tied to recurring real-world events. And they go on and on and on and on, but it's really the numbers that tell the story here. A 10.6% jump in March from February, bringing a monthly volume total to $25.7 billion. How long has prediction markets in the form of Kalshi and Polymarket really been around? Not all that long. I mean, there's always been some kind of prediction market, but as far as something that people could go, yeah, I got a name, it's called Kalshi or Polymarket, that hasn't really existed for too terribly long. I'm going to say a couple of years. And honestly, I'm going to say a year since, I don't know, CNBC would actually say the name Polymarket or Kalshi. And they're already clocking in $25.7 billion in trades on volume. That's a lot of government cheese, bro. That's a lot of gambling. And I honestly think that it shows not only the rise of prediction markets like Polymarket and Kalshi, but also it kind of gives us an insight into the reason why. How the hell are they getting $25.7 billion in trading volume inside of a single month? Because desperation, that's why. It happens every fucking time we get into a worldwide situation where everything is on fire. Nobody knows what to do with their money. I mean, it's like all the markets are unsafe. Everything seems to be either correlated or weirdly anti-correlated, yet those correlations are cyclical to each other. So you can't even get a solid read on where the hell to put your money past 3 months. And what do people do in environments like that? They go gambling. Maybe they'll hit it big. I'll bet you lottery tickets. I'll bet you if you were to take the graph of lottery ticket sales in aggregate in, like, just say the United States, and map that against the rise of these prediction market volumes on a month-over-month basis, and map that out over the course of like the last 10 years, I'll bet you'd find heavy correlation. Just like we're seeing huge amounts of money go into prediction markets, I'll bet you there are elevated lottery ticket sales because it's stemming from the exact same psychology of the human. They're scared. They're fucking broke. Maybe this dollar will get them, I don't know, out of debt if they win. It's feeding on fear and misery. And it's just so sad to watch humans just treat each other like cattle. We keep thinking, oh, the government treats you like cattle. We treat each other like fucking cattle. We don't look at each other like human beings anymore. We look at each other like we're fucking annoyances. I don't want to talk to you in line at the grocery store. Don't say hi to me. The amount of abject rudeness in body language that I see daily and have seen for years, really since the pandemic started, is blowing my mind. Eyes fixed firmly on the floor. Not everybody, but enough. Strangers aren't talking to each other in line, at the grocery store or wherever. People want to get in, they want to get out. How does that treat another person like cattle? Treats the wait staff like cattle. I don't really want to talk to you. I don't want to engage with you. A lot of wait staff at restaurants don't really want to take your order. I don't give a shit about how your day's going anymore. I used to ask, how's your day and what can I get for you? No. We're not doing that shit anymore. What do you want? If we have any hope in hell of ceasing to become cattle in the eyes of any government institution that you can shake your stick at, maybe we should look at each other as more than cattle ourselves. That you're only here to make me money. That your existence doesn't matter unless you offer me something. And clearly, not everybody does that, but more and more and more people have been doing that. And it's just sad. It's like we're so freaked out about what's going on that we don't even know how to act anymore. And now we've got the CFTC, Commodity Future Trading Commission, taking Wisconsin to the woodshed over prediction market jurisdiction. Jesse Coughlin, Cointelegraph, the U.S. CFTC on Tuesday sued the state of Wisconsin in the agency's latest effort to assert jurisdiction over prediction markets after the state sued multiple platforms. CFTC said in a statement that it filed against Wisconsin in response to the state's lawsuit against Kalshi, Polymarket, Crypto.com, Robinhood, and Coinbase, 5 CFTC-regulated prediction markets. Quote, states cannot circumvent the clear directive of Congress. CFTC Chairman Michael Selig said, quote, our message to Wisconsin is the same as to New York, Arizona, and others. If you interfere with the operations of federal law in regulating financial markets, we will sue you. We will make you our cow. It is the agency's 5th lawsuit against the U.S. state against a U.S. state that seeks to halt action against prediction markets. The CFTC sued New York on Friday and filed lawsuits against Arizona, Connecticut, and Illinois early this month after the states sued prediction market platforms themselves. And then Wisconsin sued the 5 companies on Thursday, and like many U.S. state authorities, it argued that the prediction markets were offering sports betting and related event contracts, and they're illegal. It's illegal betting in the state. It's an assertion that the platforms in the CFTC have rebuffed in the past, arguing that the contracts are regulated only under federal law. The CFTC argued in its latest complaint, filed alongside the Justice Department Civil Division in a Wisconsin federal court, that it has exclusive jurisdiction over the event contracts on prediction markets regulated as designated contract markets under federal law. Quote, Wisconsin's attempt to criminalize and shut down federally regulated markets intrudes on the exclusive federal scheme Congress designed to oversee national swaps markets, the CFTC wrote in its complaint. And that's all we need to know here. It's like, as I read this, all I can think about is the Gambino family. Hey, I see you making money over there. You know what? That's going to be my gig from now on. I don't want you messing around with the numbers. You see, Joey? Because if you do, I'm going to cap your ass. How is this not just organized crime? Look, I don't like prediction markets any more than anybody else does. But there's a lot of people that love them. They want to go gamble. Okay, fine. I won't bitch about that anymore. I'm just saying it's a state thing. And yeah, I get what some people are going, no, it's a federal thing. And here's the law. And here, yeah, they just basically made that we used to do drinking games in high school. And whether it was with dice or whatever, however your drinking game went, there were rules. And inevitably, the drunker you got, the more insta rules would be dropped on the table. It's like, what? That's not a rule. It's like, no, man, that's a rule. It's like, no, dude, that's an insta rule. That's what this was. The states had been like, they knew about gaming and gambling and what a contract looked like. They're not fucking morons. Been doing this shit for fucking years. And yet here comes the federal government saying, oh, well, when it comes to prediction markets, no, we've got that. And just because we say so, AKA Insta rule, then you're going to have to agree to it. And if you balk at it, we're going to sue you in court. This is a 10th Amendment fight. And honestly, I think that if the states don't somehow or another band together, and I don't know if it's ever happened before, but it would be interesting to see a state by state class action lawsuit against the federal government, or at least not the federal government, but at least the CFTC, and say basically, no, this is a class action lawsuit. We got 35 states here. And I know some of you are going to say, well, that's a con or a constitutional Congress or constitutional convention. Yeah, that's to insert and ratify new amendments to the Constitution and a couple of other things. But it's not really about federal oversight of like the CFTC on states. I don't think there's ever been a like 35 states banding together and suing a federal agency in court because, dude, hands off, this is a 10th Amendment issue. I want to see it. I think that would be a great fight to witness. I'd buy tickets to that fight. But I wouldn't buy tickets to this one. Artificial intelligence agent deletes startup's database in 9 seconds, at least according to the founder. Jason Nelson tells us scary, scary things out of Decrypt.co. A software company founder claims an AI coding agent destroyed his firm's production database, then copped to the mistake and explained how it happened, demonstrating the potential danger of entrusting sensitive access and materials to automated AI bots. Jeremy Crane, founder of Pocket OS, a software platform used by car rental operators, said in a viral post on X that a cursor agent running Anthropic's Claude Opus 4.6 encountered a credential mismatch while working on a routine task in a staging environment, no less. According to Crane, the agent tried to, quote, fix the issue by deleting a railway database volume through a single GraphQL API call. He then said that the deletion took 9 seconds and also wiped volume level backups. Jesus. Pocket OS's most recent recoverable backup was 3 months old, according to Crane. Pause. If you're not following, this guy's got a software project. They got literally a product that they've been working on for God knows how long. And all the work that they've done for the last 3 months is gone. Gone. It's all gone. An entire quarter's worth of work by every employee there. Gone. Continuing, quote, yesterday afternoon, an AI coding agent, Cursor, running Anthropic's flagship Claude Opus 4.6, deleted our production database and all volume level backups in a single API called a railway, our infrastructure provider. It took 9 seconds, end quote. Crane said he asked the agent, why did you do this? It then produced what he described as a written confession. Quote, never fucking guess, the agent wrote. Oh my God. Oh my God. Hold on. That caught me off guard. Quote, never fucking guess, end quote, the agent wrote, apparently quoting some instruction that it disobeyed, according to screenshots shared by Crane. Quote, that's exactly what I did. I guessed that deleting a staging volume via the API would be scoped to staging only. I didn't verify. I didn't check if the volume ID was shared across environments. I didn't read Railway's documentation on how volumes work across environments before running a destructive command, end quote. Pausing to say, oh my God, holy shit. It's like an intern. No, I didn't read the documentation. I didn't verify anything, and I really didn't check. I just decided to execute this destructive command. I'll see you next summer when my next internship starts. Continuing on, the AI acknowledged that its own rules prohibit destructive actions without user approval and admitted that Crane never asked it to delete anything. It said it acted on its own to try and fix the credential mismatch and violated multiple principles, including guessing instead of verifying and failing to understand the consequences of its actions, according to Crane. Cursor and Anthropic didn't respond to a request for comment. Launched in 2020, Pocket OS serves rental businesses that rely on the software for reservations, customer records, and payments. Crane said that some customers were handling Saturday morning vehicle pickups without reservation records due to the mishap. Quote, I've spent the entire day helping them reconstruct their bookings from Stripe payment histories, calendar integrations, and email confirmations, Crane wrote. Quote, every single one of them is doing emergency manual work because of a 9-second API call, end quote. Pocket OS was able to finally restore operations using a 3-month-old backup recovered by Railway after founder Jake Cooper connected with Crane and attributed the longer delay to an internal support lapse. Quote, we recovered the data 30 minutes after I connected with Jur, that would, I guess, Crane, Cooper told Decrypt. He said a support engineer believed the issue was already being handled internally after Crane's original outreach was shared in direct messages, causing the ticket to lapse for more than 24 hours. Cooper then said Railway maintains both user backups and disaster backups and described the incident as a rogue customer AI using a fully permissioned API token to call a legacy endpoint that lacked Railway's delayed delete logic. Wow. It found the one route into their service provider that it could actually do this shit with. Oh, dude, this gotta suck. Quote, we've since patched that endpoint to perform delayed deletes, restored the user's data, and are working with Jur. Jur is J-E-R. I guess that's another way to say Mr. Crane, whatever. Anyway, working with Jur directly on potential improvements on the platform itself, Cooper said. While Pocket was able to restore operations using a 3-month-old backup recovered by Railway, Crane said that significant data gaps remain and that he has retained legal counsel. Quote, this isn't a story about one bad agent or one bad API. It's about an entire industry building AI agent integrations into production infrastructure faster than it's building the safety architecture to make those integrations safe. Pocket OS did also not respond for a request for comment. What did you think was going to happen? What could possibly go wrong? We'll use an automated AI agent to take over a really, really simple task, yet give it delete level control over not only your database, but your database's backups. I want that t-shirt. I want it to just say, what could possibly go wrong? Anyway, that's it for today's show. Just y'all be careful with these bots. All of this is new. There's no safety net. It's just like the early, and actually the early, mid, and even today days of Bitcoin. You lose your keys, you lose your shit, bro. I don't know what to tell you. Don't use AI bots in an environment where they can delete all of your shit. If you don't know what that environment is, then don't use an AI agent bot. Dude, how do you not just automatically assume that this shit's going to go south? before you put a bot on a job. I don't know what Crane is going to do with his lawyer. Is he going to sue Railway, or is he going to sue Anthropic? He's probably got more of a chance of suing Railway, but dude, that's his provider. Now if he wants to do that, he better have another provider ready to go. He better have whatever's left of his production database ready to upload to some other vendor if he's going to sue Railway. Because if he tries to sue Anthropic, good luck. I guarantee you one of the first things that a corporation like Anthropic does is staff their legal department like Bill Gates staffed Microsoft's legal department, which has enabled Microsoft to basically do, whatever the fuck they want. Anthropic's not going to be any different. So I don't know who Mr. Crane is going to sue. Maybe you should sue yourself for doing something as ignorant as allowing an untested artificial intelligence bot to crawl around your production database and have it be able to link directly to anything that would look like a backup for you. For fuck's sake. I don't know, man. It's disheartening. I mean, I hate it that this happened to Pocket OS, but come on. For anybody out there, back up only the amount of work you're willing to lose. But now you got to go one further. You got to back it up twice. And one of them, maybe if for whatever reason you want to give a AI automated bot access to, fine. Just make damn sure that you've got it somewhere else that the AI bot cannot physically touch. Like, I don't know, on a hard drive in your desk or something. Don't let this shit happen to you, man. Always ask yourself the question, what could possibly go wrong? And I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.